Hey everybody, it's Clayton again, coming back with a new video. On this one, I specifically want to focus on why I pick stocks that I do. I think I've touched on this in other ones, but I want to delve deeper into that. Some features that I've noticed that other people have asked me about on M1 Finance that I want to kind of show off, and the 10, 11, 12 system that I have been following and want to kind of share with you guys briefly. But just stay tuned. That's going to be the video. If you like my content, feel free to subscribe, like this video. I'd greatly appreciate it. It helps me reach more people. I'm up to, I think, like 100, almost 30 subscribers, which I say every time blows my mind. But let's get right into the video. So just with my portfolio, I'm at $2,420, down $535 or $539. And one thing that I noticed that I had come across with people when it came to M1 Finance, they had asked. So obviously you see with my pie, I'm down 23%. But with each individual pie you have, you can go into each pie, see down 33% there, and see specifically how you're doing in each pie. I guess you have to click on it, you can see it here as well. But you can go pie by pie to see how you want to do your allocation, what you may want to raise or lower when it comes to your actual versus your target. For me, it's not really that big of a deal, but I know for some people, that is a huge game changer for them. I saw it in the previous comments on one of my videos, and I kind of wanted to bring it to people's attention in case they didn't know. And one other thing before I really dive into how I invest in the route I travel when I do that, and why I pick some stocks over others. I was asked via email about somebody that had put stocks into their pie, but they wanted to move the stock or completely get rid of it in their pie. And as I talked about in the video that most of you probably either came to my channel through or have seen when it talks about moving stocks through M1 Finance and moving to a new pie, you don't have to contact them if you haven't purchased anything in that pie. So if you've got a stock that you put into the pie, like I'll show you for example right now. Let's just do it on the fly, and then I'll jump into the other stuff. So let's just go to research. Let's go to my pies. Oh, actually, you know what? I'll do it the easier way. Let's just click on one of my pies. It doesn't matter which one. Let's just click on commercial. And let's click edit pie. And let's add. And let's just go with Apple. Sure, whatever. We're adding Apple to my pie. Now, I would set the allocation. I don't feel like messing with everything right now, but let's just say I set the allocation 3%. Now, before any kind of process or order is done, you can go back in here and completely delete the stock before any purchase has been made, and you won't have to worry about any kind of transactions or any kind of taxable events. I know for some of you that may seem obvious, but I was asked that question by more than one person, and I just wanted to make that clear that it isn't a taxable event until you have actually put it into your pie and there has been a purchase made where some stocks have been purchased for that stock. Until then, feel free to do whatever you want. You can reorganize the pies, you can put them in, drop them off, whatever you want to do. It's up to you, but it has no effect on your overall portfolio until you actually buy some money. Let's just, in case I did something I wasn't paying attention, let's just exit. So the meat and potatoes of this video that I wanted to talk about specifically was stocks that I invest in and why I invest in them, and stocks I avoid. And for some of you, I've pointed this out once in the past, and Microsoft's going to be one I'm going after again. And I mean no ill will towards Microsoft. They're a great company. But I really want to explain why I don't invest in Microsoft. And I know people disagree with that and think it's a great investment. But for somebody like me that's doing dividend investing, it doesn't fit. Sorry if you heard about that. That's actually my phone going off. I apologize. It doesn't fit into the criteria that I look for. And the criteria I look for is something that by Mark Lichtenfeld. I may pronounce his last name wrong. He has a great book called Get Rich with Dividends, a proven system for earning double-digit returns. If anyone's a dividend investor, I recommend reading this book. It's a great book. He doesn't try to sell you on anything or pitch you on anything. He simply goes over the ideas of how he invests and how he made most of his money. And it's a program that he calls the 10, 11, 12 method. It may not be something he created. It very well may be something that has been done by other people, and he's just promoting that method. But essentially what that method is you want to make, in the next 10 years, you want to generate at least 11% yield and a 12% average annual total returns on your stocks. And obviously that's going to be determined by the yield. Like what you want to look for is the yield, dividend growth, and payout ratio. I've gone over this in the past, but for me, I try to go in the yields that are around 4% or a little bit higher. If it's a stock I really like Disney, I'll go a little bit, I'll go lower just because I really wanted to own Disney. But for the most part, I won't touch stocks that are under a certain threshold. 4 and above is me. But there comes a limit. When you start running into, I'm usually not comfortable above 8%. You can find some that are there. That's when you want to check their payout ratio. You want to check their history and see. But usually I sit between the 4 and 7 range. You can maybe find some, like I said, but always check out their payout ratio to see how much is being paid towards dividends, and their history and things like that. So for me, those are the two. And then also the growth. I always like to look at the dividend growth for the company and how they've been growing over the last few years. And like Microsoft is a perfect example. We've got 10% growth, and you want to try to find a company that gets around 10% growth. I know it's hard to find them, but there are a lot out there. There are plenty out there that you can get 10, 9, even 8% growth. But I really want to go into why I pick these over others, because Microsoft's one that I made a video about and got backlash about, saying that I was dumb and it was poor choices and all that. And I really want to break it down by the numbers and show you why. And what I'm going to use as an example is a stock that I really like is IBM. I think it was the first video I ever made. So I've got a site up called buyupside.com. It's just an easy way to kind of calculate your dividends and your reinvestment calculations, but you can do it yourself on paper, obviously. But the first thing I want to say before I go into any of this, so we see right now that, let's just take a stock, let's not take IBM because they're at 5.5. Let's take a stock that's at a 4% dividend even. In 10 years from now, we're gonna make this a constant for everybody. None of the stocks have any growth. They sit exactly where they are today, and they have a 10% growth of their dividend year in, year out for the next 10 years. That's the set basis I'm going to use on these stocks to demonstrate my point. So with a 4% dividend, after 10 years, your yield will be a 9.4% yield. If you had a 4.5% dividend, you're making 9.8 after that. But the one I want to talk about is, Microsoft's not even at this point, but if you're making a 1.4 is their dividend yield when you purchase them, with that 10% boost every year for 10 years, where you'll be sitting after 10 years is a 3.3% dividend yield. So after 10 years of investing in a company, I'm just going to say like Microsoft, you still will not even be at the 4% dividend yield threshold. So if it's a stock that you're going to hold long term, and you feel their value is going to increase, and maybe they're going to jump up higher than 10% when it comes to their growth, but for me, that's what I look at when it comes to three. I look at dividend growth, I look at dividend yield, and I look at payout ratio. There's other things I kind of look at as well, but those are the three main targets that I want to make sure fit under a certain quality. And for payout ratio, it's below 75%. I'm actually more comfortable below 60, but 75% doesn't scare me. 75% doesn't scare me as much. Over 4%, sometimes I'll dip in 3.5. And the the growth rate of 10%, but sometimes, like I said, 9 or 8% works. But let me just show you numbers, because that's the easiest way to really demonstrate this. That I'm going to use IBM, I'm going to use Microsoft. So let's take IBM, for example. We've got a 5.55% dividend yield. So I'm going to take the exact same for everything. I buy one stock, or let's just say it's one stock valued at $10,000. So with the 5% dividend yield, it'll be $550 when you do the math. Dividend growth of 10%, we're going to say it doesn't change at all. But for 10 years, let's see what we would get. So even though I'm reinvesting dividends, I want to just prove a point and say without reinvesting those dividends. So after 10 years, you'll make, let's bring up the calculator just to make it easy for everybody. You'll have $1,942. So that's what you would have made. Your total value would be. So you'd made about $9,600. Okay. So now let's change that exact same thing to Microsoft right now. If everything stays the same, like I said, if it was a $10,000 stock, if it was valued at 10% growth and everything stayed exactly the same, we just changed the dividend yield. Let's go with 1.2, so that'd be $122 after 10 years. You're making $12,000, so let's just do the difference. So in that 10-year period, just from going from Microsoft to IBM, if nothing else changes, if it sits exactly like it is, and they both stick with a 10% growth, which doesn't seem out of the ordinary for either one of them. They've been growing consistently for years. Let me see exactly what IBM's growth has been, because I want to be as transparent as possible. IBM's growth, it was only 3 last year, but it's projected to be at an 11 on average. So that's about where I'm looking for the average after 10 years. It's about 10%. that you're losing $7,503 by investing in Microsoft if it was a one-to-one comparison. Obviously, the stocks could change. The value of the stocks could go up. Microsoft could skyrocket and become a company that's worth $1,000 per stock. And you have to figure in what you could sell the stock for. But for me, I'm strictly doing dividend investing and reinvesting. So that's why I really wanted to point this out and how I determine, or one of the key factors to me as to why, but I really wanted to show and demonstrate why the yield, once you have a growth rate that you see is safe and that you have, what's what I'm looking for? That you have a payout ratio that, again, is sustainable. Once you find that information, that's why I like to go with the 4% dividend. Let's even just go with one that, let's find another stock in my portfolio that we can just grab randomly. Let's go with, who do we know is going to keep their dividends? Definitely. Travel, let's go to commercial. Who do we want to grab? Let's go with Pepsi. Sure. So what's Pepsi currently sitting at? I don't know theirs off the top of my head. So let's see what Pepsi's currently sitting at their dividend yield. Their dividend yield is sitting at, see, they're at a 2.92. The main reason why I picked up Pepsi, like I said before, was because I have a friend that works there, that's one, and also because with Coke, I'd like to kind of have their competitor just to see. But even there, you're still making roughly $3,000 more than you're going to make for Microsoft if everything is equal. And then we'll just take one more just for transparency purposes. Let's go with Coke. Sure, whatever. Let's go with Coca-Cola. Coca-Cola's dividend yield right now is a 3.6. Again, not one that I completely love. I'm starting to look more into the ones like I told you, 4 or higher. And I'm assuming more is going to start to become more attractive. But even then, you're still making nearly $4,000 more investing in Coca-Cola. If all things are equal, they do that 10% growth rate, which isn't that crazy to think that they could do. And then as long as the payout ratio looks safe, then you can understand why I invest in the stocks I invest in. I really wanted to kind of demonstrate for you guys because I have been getting asked questions as to why I pick what I like, what stocks I like. And I've told you, I'm no financial advisor. You may hate the strategy that I'm talking about right now. You may think it's flawed. You may think it's pointless. You may think it's completely irrelevant and doesn't work. And I completely respect your opinion. It's just something that I have put a lot of research in and done a lot of just put time into how I want to build my portfolio. And that's the route I want to take. I've said it 100 times, I'm not a financial advisor. This is just my opinion. I always tell you to do your own research before you make any decisions. I'm presenting you how I do my research, but there's 100 different ways you can do it. I will gladly go into, if anyone's interested, the 10, 11, 12 method in depth, if anybody really wants to. But I would love to see in the comments below, if you feel like interacting, how do you determine a stock that you like? What is something you go through when you pick a stock? What is the aspects you look at when it comes to a dividend stock specifically, or maybe not even a dividend stock, just in general? What do you look at? Do you look at the yield? Do you look at the payout ratio? Do you look at the dividend growth projected or what they've done in the past? I'd love to see in the comments what you do, and also stocks that you guys like. I always like to interact with people and see like what they're investing in, seeing if it's something that I should maybe look at, or just kind of talk back and forth and see, why do you like this stock? What is it that interests you about this stock? Why do you feel it has a bright future? And that's kind of what I just wanted to leave this video off on. It was a short little video. I want to thank you guys for watching. Like I said earlier, I would appreciate if you guys drop a like on the video. It helps with the algorithm. It helps me reach more people. If you're new to the channel, feel free to subscribe. If you have any questions, I always am free on my email. That's claytonscash89@gmail.com. ClaytonCash89. I just realized I forgot the S. It's ClaytonCash89@gmail.com. Again, that's ClaytonCash89@gmail.com. You can ask anybody if they feel like putting in the comments. I've interacted with plenty of you and answered questions, helped along the way when it came to M1, transferring stocks, things like that. I'm always free. I have the alert on my phone, so I'll see when you email me. And if you'd like to be in a future episode, send me an email and say I'd like to be in an episode, or ask me a question and I may bounce back to you saying, hey, do you mind if I use this in an episode? Most of my topic today was based off of a user question, but I was kind of keeping it private. If you would have liked to be in it next time, I'll gladly share your name. But yep, now I'm rambling. Thank you guys so much for watching. I hope you guys have a great rest of your day, great evening. The stock market, as always, is going up and down depending on the day. Who knows what's going to happen with everything. I really don't understand how the market's continuing to go up. Well, I know how the market's going up. The Fed's just dumping money into it while everything's going on that's going on. But just be careful. As you can see, I've got 150 in my account right now. I'm going to be putting it probably in tomorrow or Friday. It was going to invest on Tuesday, but I kind of held off because I just wanted to wait a minute. I'm still doing dollar cost averaging. I just wanted to wait because I thought the market would change a little bit this week. So, like I said, I hope you guys enjoyed the video. Sorry about that late rambling. I really appreciate all the support. I hope you guys have a great rest of your day. And if you're watching this tonight, today is the 22nd. I hope you guys have a great rest of your evening. Thank you, and have a good night.